Good morning. Welcome to Stock Market Today, Monday, December 21st, 2020. This is your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So we are in holiday trading mode. Holiday shortened week this week with a half day on Thursday, day off on Friday. Next week, market closed on Friday. I will not be here next week. There will not be a show. So just a little publishing note there, a programming note. U.S. equities lower in Friday's trading, though it was very quiet. They ended off the worst levels of the day. Energy, REITs, and financials were among the laggards. Staples, healthcare, industrials, and materials outperformed. Treasuries were mixed with the curve steepening. Dollar was better on the major crosses, but still down about 1% on the week. Gold was down 10 basis points, but was up about 2.5% on the week. WTI crude up 1.4% and closed out its seventh consecutive weekly gain for crude oil. So kind of interesting dynamics, and obviously all the fireworks at the end of the day as Tesla was added to the S&P 500 and will trade in the index for the first time today. Now, as we get to the desk this morning, it is a bit of a mess around the world. S&P futures are down about 2% after finishing higher last week. Asian markets were mixed overnight. Hong Kong a laggard, China outperformed. European markets are under pressure as well. Number of the markets over there are down more than 3%. Treasuries catching a flight to safety bid with the curve bull flattening. Dollar is stronger against the majors, another haven asset, as you would imagine, after hitting levels not seen since April 2018 last week. Gold down 90 basis points. Crude oil down 6% after that 7-week winning streak. So very much risk off as we move into the holiday shortened week. A lot of themes playing out currently under the surface of the market, and realistically, it's no need to be a hero here in the last 2 weeks of the year. But let's look at it. Let's take a look at the structure of the market. I think I say it all right here when I ask the question, is it time for a holiday rest? And I'm wondering if all the good news is priced in. Friday night after the close, we learned that the Fed gave the banks permission to resume buybacks. Goldman, JP Morgan wasted no time with getting their announcements out the door. Last night, Congress coming to an agreement on another fiscal stimulus package. So all the catalysts that the market was discounting appear to be known at this point. So I do think in the near term that does open the door to the potential for negative surprises. So what do we want to start thinking about? So for weeks, I've been telling you what these support levels are. Now we might want to start thinking about them. For the S&P, 360, then 340 is the key. Below that, above 340, the upside potential is still there. This is very much a near-term phenomena in my mind right now. Qs, 260 is key support. 300 is important in the near term. IWM, 170 to 160 to the downside is the levels you want to see hold to keep the structure of the uptrend intact. Ideally, you want to see breakout levels hold, right? The tops of these ranges, the higher support levels that I've pointed out, the near-term levels, those are essentially the breakout levels, and you want to see those hold in the near term here. So if we get some choppiness over the next 2 weeks, thin volumes, markets being pushed around by news flow, you want to identify the opportunities. At the same time, I think it's also a great time to say, look, the market's had a monster run this year. If you're holding names that didn't keep up, or even worse, are down, you got to ask yourself, why am I holding these stocks? And if you don't have a very, very compelling reason, it's a great opportunity to clean up the portfolio. I know I spent a lot of my time this weekend looking through my individual names and saying, what doesn't fit here? What doesn't line up with what I think should be playing out and is actually not playing out, right? Because they're underperforming or things like that. So I know that's what I'll be spending my time doing this week. Let's hit our market in a minute. Holiday week could see some near-term profit taking. I think I hit that, but the bigger trends remain higher. So let's watch the levels. I think I touched that. Congress agrees on the new stimulus. Is the good news priced in? I think that's kind of what we're asking ourselves here, right? Oil leads the commodity complex to a leadership position, and that's kind of interesting to me. And we'll see now if the inflation trade begins to ramp up again with stimulus. We'll see how that plays out. Again, part of that stimulus is direct payments to people. Slightly different than the QE type stimulus that we've seen for the past 12, 13 years. Futures are under pressure this morning. Let's take a look at the major indices from a power bar perspective. Everything was lower on Friday, though marginally so. Dow down 30 bips, 4 to 2 bulls to bears. S&P down 40 bips, 130 to 43 bulls to bears there. NASDAQ down a like amount, 30 basis points. Small cap, small underperformer, down 50 bips. Bonds down to extending yields higher. Everything down across the board. So, not much to see from Friday's activity. I mean, like I said, the fireworks was Tesla at the end of the day, and Tesla is promptly trading lower this morning by about 5%, at least on the last check. I am recording this, however, at 6:30 a.m., a couple hours before you are going to listen to it. According to the Chaikin Power Bar, small cap stocks and large cap stocks are still strongly bullish. Let's hit our stock of the day. This is an example of a stock that if I owned it, I'd have to question it this week, right? Because we've been lagging since November. Now, the market's been strong. Market's trading at all-time highs. And I know LendingTree is one of those stocks that's owned by some popular thematic portfolio managers out there. And maybe this is a great company. I mean, LendingTree certainly was a monster grower in the past. But this stock's done nothing this year. In a year where the S&P has been volatile but grinding higher, LendingTree is lower on the year. I mean, year to date, right? I mean, we're here, folks. We're lower. We're underperforming since November. We have bearish money flow. We have a very bearish rating. We have a weak trend below the declining long-term trend line. And so even if you love LendingTree, if you think it's a great business and you want to own it for the next 5 to 10 years, it doesn't mean you can't manage your risk around the position. It doesn't mean you can't manage the position. I do this a lot too. I mean, I do pay close attention to fundamentals. And I say to myself, I may love a story, but if the price isn't there, it becomes drastically underweighted within my portfolio, or it might just go to a watch list. LendingTree is that type of name, I think, right? It's been an underperformer, even though it's a great business. Type of name where if I own this, which I don't, I'd be looking at it and saying, why do I own this? Let's free up some capital. Maybe there'll be a better opportunity somewhere down the line. Let's take a look at our sector tracker now. Movement of the last 5 days. Tech, discretionary materials, and healthcare, your top 4. Staples, REITs, comms, middle of the road. Fins, industrials, utilities, all higher. Energy, profit taking. And with oil down 6% this morning, likely going to see some more of that. Now, energy is one of those areas that we've been harping on. Looks like it's been making the turn. It's important to understand that these things don't happen in a straight line. My view here in the near term is that we are susceptible to downside surprises in the near term. I'm going to look for those. If that were to play out, I'm going to look for opportunities to become more aggressive as markets become oversold above support, because the bigger picture trend is still higher, right? Be able to contemplate that there could be many different trends playing out at the same time. And I think there's a potential for near-term weakness within the context of longer-term strength. And we want to make sure we have the dry powder to take advantage of that. And part of the reason I think the trend longer-term is okay is the next group, semiconductors. Past 6 months, been a big outperformer by 30%. Power bar ratio very strong, 6-to-1 bulls to bears, ranked number 12 of 21 subsectors. Moved down 1 slot over the past week, but some names you might want to take a look at. Smart Global Holdings, SGH, Cirrus Logic, CRUS, and Diodes, DIOD, are very bullish, and bullish respectively, and holdings of a fund that legitimately traded at a new all-time high on Friday before fading through the afternoon. Bullish ETF rating for XSD, the SPDR S&P ETF. Strong trend above the rising long-term trend line. Bullish money flow, bullish relative strength, right? Everything looks good here, right? So it's hard for me to kind of get bearish on the market when I see the semis look like this. But again, separating near-term, short-term, right? Thin liquidity this week potentially. So just something to keep in mind. Taking a look at what's trending now. Friday's movers and shakers, our gainers and losers. Fortinet and Cadence, part of the software group. I didn't see anything company specific on either of those names. Fortinet, FTNT, up 6.9%. The Software names. Remember when the software names got sold off because of SAP's earnings? That was funny. And it just goes to show you how much or how little thought actually goes into the market by a lot of investors these days. SAP earnings were punk. But instead of people kind of drilling down and saying, hey, look, they own Concur, right? Concur is, has an enterprise side, right? If you've ever had a corporate account, you've probably used Concur. But they hit the software names as a group. Did make sense to me. I actually wrote about it. Now software names are trading at all-time highs. Fortinet up 6%, no news. Vulcan Materials, VMC up 4%, initiated equal weight at Morgan Stanley. Martin Marietta, MLM, overweight at Morgan Stanley on the initiations. Two names you should probably be paying attention to as we get into kind of infrastructure type spending around President-elect Biden once he's in office. Abiomed got FDA clearance for Impella, sent that stock higher by 4% on the day. On the loser side of the board, Intel, the shoes just keep dropping on Intel, and it's fascinating to me because I think Intel, if they don't right the ship quickly, is on its way to becoming a Harvard case study as another tech leader that lost its way. And the technology landscape is littered with them. The names like Hewlett Packard, names like Xerox, you can go down the line, them. Microsoft making announcements that they're looking at producing their own chips for their Surface tablet. You're seeing a lot of this where big companies like Microsoft and Apple bringing production in-house, and it's weighing on the Intels and the Qualcomms of the world. So something it's fascinating from a business standpoint. It's fascinating if you're interested in studying businesses, and especially businesses that shaped industries, right? The semiconductor industry as we know it does not exist without Intel, and now they're fading. And that's fascinating to me on some level. It's not fascinating if you own the stock, but I've kind of been down on it for a while. So from a business standpoint, right, there's actually businesses behind these ticker symbols, and it's fascinating to watch the creative destruction in the marketplace. FedEx earnings down, send the stock lower. VNO, BXP, and SPG. I didn't see anything company specific. All of these are REITs to send them lower on the day. Let's take a look at the charts now. Commodities is leadership. I'm asking that question. We're getting more money. Inflation is the theme. It's been my theme for a while. For those of you who have been paying attention, we've talked about it in the ags. Now you're seeing it in oil and energy. We may see it across the board. Broadly in commodities, we've talked about it. I write about DBC every Monday where I've said we have a bullish stance. But what's interesting to me now is we're starting to see it perk up on a relative basis. And listen, there are cycles out there where commodities begin to outperform the broader market, and we could be heading towards one of those cycles right now. So that's kind of fascinating to me, and it's something that we've been talking about and something that we're going to pay close attention to. Gold is on watch here as it breaks above the 50-day moving average after holding the 200-day. It is overbought in the near term. On a relative basis, not a ton to write home about, but if we wanted to draw this downtrend line, we're very much on the cusp potentially of grabbing, breaking that downtrend line. So that would be interesting to see how that plays out. Especially with some fear creeping back into the market. Gold is down this morning by about 1%, but if some fear is creeping into the market, we'll see if that lends a bid to gold down the line. Not sure how it's going to play out. I'm watching closely and just trying to understand what's playing out within the marketplace. And then finally, yields. We're going to want to watch them today if there's a flight to safety in the treasuries, which looks like there could be early going. But bigger picture, the 10-year yield appears to have turned the corner to the upside. Now, the question is how high will the Fed let it go? But RSI have shifted to bullish ranges, 50 cross the 200-day and moving higher, 200-day actually beginning to turn higher as well. So a lot of moving parts this week. If you're a markets person, there's a ton to pay attention to, but it is a holiday week, so we'll take everything with a grain of salt. Have a great Monday. Take us for a test drive, shakenanalytics.com/test drive. I will be back with you tomorrow, Tuesday. I will be here all week. Actually, I'll be here through Thursday, but I am taking the following week, next week, off to spend some time with the family. Have a great Monday, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.